Yeah, my friends, and thanks for tuning in to DeFi-Logic's TA Tuesday, live in the server every Tuesday at 10 a.m. Mountain Time. We have a partnership with Blowfin, and our Bitcoin, ETH, and Doge strategies are currently in beta testing on Astrobit. Join us in Discord to learn more. The link is in the video description below. In today's community call, we will review charts for Bitcoin, ETH, Sol, BNB, PRIME, Ondo, NMT. And for legacy markets, S&P, Dow Jones, NASDAQ, US dollar, 10-year bonds, and finally, gold. With that, over to Eddie.
Hello, underwater bulls or profit bears. I know John's going to go over this, but I'm short equities, and I'm looking to add to shorts on any bounces. So I'd be interested to see if his idea is similar, but I think we're going to tag these levels and possibly lower. So just a quick little bear porn for you guys. Crypto's just beta to that, right? So I'm bearish on equities. This is still my main idea, is a sweep of this level and a reclaim. I'm personally not buying without the reclaim, and it has to have some solid momentum and at least a couple hourly closes, preferably a 4-hour. I might even wait for a lower time frame shift even after that. So like the sweep, a reclaim, and then like another one, because there's no point in stepping in front of the moving bus, right? This is looking bad. I imagine a lot of people must have longed the GCR, and I think if we start testing these wicks, there's a chance people puke and we could get a deeper pullback. Like, I never noticed this before, but this daily candle on Bitcoin has a no bottomless wick. It could trade all the way down to 54. We'll see. We're at a point right now where it's very clearly risk off, and you don't just buy because it's a bull market. Maybe it's still a bull market dip, but it's so hard to know with like war news and just market manipulation and just all kinds of crap is happening. So it's just about being very careful with your spots. I don't even think this is a good spot to just buy spot in DCA, because like you're buying so high and alts just bleed like crazy on every little pullback. So looking for this, not ruling out the idea of it trading down into 54 to fill in this inefficiency right here, because markets don't like to leave inefficient areas. They typically always fill it. So the only place I'd be maybe open to like just blindly leave bids would be like way down here, or maybe even start like here, like 53,100 all the way down to 50,550. Potentially I'd be open to leaving blind bids there, because if it trades further than that, then it's over. DeFi-Logic is over. Our parents hate us. It's just done. Yeah, it looks ugly. It looks bad. Like realistically, I don't even like the idea of coming down here and being bullish still, because it's not bullish in my opinion. Like that's high time frame break and structure. This has been my 3-day level for ages, right? I think I first talked about this like when we were around here, way back in March even. And I think closes into this is just, it doesn't look good at all. It would look really bizarre for it to like top like that, but it seems like it could be. These are the previous all-time high levels, and we're like well below it. When I like to trade ranges, so if that's my range, like then my range low is like all the way down here even. So it's hard to say where it'll stop. I really don't think right now is even the time to DCA spot. I think that's a fool's plan until you see some strength. I did buy this like war wick, but I de-risked once we got there, and we rejected pretty hard, and it seems like we're gonna keep going lower. So that's what we're watching for now. 59K. There's a high probability that this gets filled in as well. Maybe leave some blind bids here. I haven't done it yet. I might, but I'm not sure. It really depends. It really depends on how aggressive equities pull back to, and what the dollar looks like and stuff like that. Because at the end of the day, this is considered a risk asset, and if we're in a risk-off environment, they're gonna just get destroyed. Ethereum looks terrible as well. I mentioned this in the Discord. This is completely bearish order flow. I did originally buy this box like I had planned with you guys. Luckily, I took profit when it failed to reclaim this area. I should have shorted this, but I was still like a believer, and short setup on Saturday, another short setup yesterday. Down here is the area I'm looking at right now. Same idea though. I don't even know if buying spot Ethereum is worth it. Like there is a Ethereum ETF stuff, and it should pump, but like from a fundamental perspective, I personally don't like trading on Ethereum. Like it's so expensive, it's not worth it, it's slow. So it should pump and that'll bring alt season and all that, but I think I've been pretty vocal about, I think Solana is actually the indicator of alt season this go around, and Ethereum is, to me, almost seems like AOL, where like it had a chance to be something legit and they're just like failing to gain that share. So still though, if you have hundreds and thousands of millions of dollars, obviously it's one of the better plays to play because you could just bid the SR level. I don't think we've technically really retested it. It's like this breakout of the accumulation and we never really tested it. So it's still a good trade. Realistically, I probably should make this box a little bit deeper because that would be the whole zone that you'd want to see. And if you're going to leave blind bids, which I highly suggest not doing right now, you'd want to at least be like in the lower parts of the zone. But it just looks bad. It looks super ugly. It hasn't even made all-time highs yet. In the grand scheme of things though, like a dip down here is better looking than the Bitcoin dip because it's still technically a bullish market structure. So I don't know, I'm really undecided on it. I'll definitely be keeping an eye on this level, potentially buy some as we trade deep into it for the hope that it makes new highs. Still looks like it should. It's just been relatively weak compared to basically everything else. So BNB was looking strong for a bit. I think that kind of has died recently too. So I've been watching this like triangle. It's starting to break out of it. It gave good shorts too, or everything has put in bearish retests, right? And it was really cool too if you watch like sentiment on Twitter and stuff. There's very few people buying this war dip. I bought it and even posted about it, but I think I probably saw, I don't know, maybe 5 people doing it, and then everybody started bull posting here. And I was like, I guess I better take some profits because these people are being retarded. They were bearish down here, now they're bullish here, and this is a bearish retest. So glad I did. I don't really have an idea as to where it'll stop. I think the safest play for it still is waiting for it to reclaim some highs. You could also just watch for these lows right here if you have a reaction on them. If it sweeps them and reclaims, maybe, but it's looking the same thing as like the altcoins. This is all very inefficient weekly price action. It probably looks even more inefficient on the daily. So maybe we test into this level again, 380-ish, but I was getting bullish on BNB, but not so much anymore. I don't know where it's going to go down to. If it comes all the way down to this key SR level, then that's a pretty easy buy, in my opinion. Because it's the same idea with Sol that I was talking about. Like if it goes below it, then it just looks ugly. Then it's back into this reaccumulation phase, and it just is going to look like shit again. It needs to hold above that. Watch for reactions at the wicks, and I think just this region too might be one to pay attention to as well. And then depending on how this daily closes, if it doesn't take any of this liquidity first, and it just closes before it, any bounces into this 555 region is a short to down here. Hopefully that makes sense. Prime's been on my watch list for all year and I haven't bought any of it, and like I've been watching this thing just go up only for a year basically. So I think this is probably a good one to buy when everything does settle down. In a normal world, I would look for bullish price action to take place here. So I'll still watch for that for the whole thing that I always talk about, like for it to form a low, for it to sweep it or to reclaim some high, like some internal highs to get buying on it. I definitely don't recommend leverage trading right now at all because you're probably just going to lose your money unless you're shorting and you know how to short. You just got to be aware though. Don't short into support. Like we need bounces to short. So we'll look for some bullish price action here in this like 15 to prime area. And then same kind of idea. If it comes all the way down to 7, I think that's just an automatic buy and pray to whomever you pray to that it's not over. Because down here is a pretty good risk to reward in my opinion. Even if you come up for the bearish retest, it's such a huge move. Whereas the downside is just losing it all, right? So we'll be keeping an eye on Prime. I think that it could be the main leader of the gaming sector, and it clearly has been very strong as of this year, since launch basically. I know I'm rambling, but that's basically it. So if we don't take out these lows, you could short a bounce. I think it doesn't have very many futures places though on it. So really the idea is just to be watching this level for spot buys or buy and pray at $7 if you get it. Even here at 840 is okay to start scaling in maybe. So you don't have to try to time the bottom. Just place your orders from 8.5 down to these wicks here or even lower. That's the thing, it's not a good idea to leave blind bids right now because who knows where it's going to stop. It's just better to keep your levels and watch. And if you start seeing buyers step up, then join them and maybe go with 25% of your allocation on it. And if you have to buy higher on confirmation of strength, I feel like so many people think that you have to buy the lows, but buying on strength and confirmation is better right now, in my opinion. Looks like shit though. My NASDAQ short is making me money, thankfully. So I wanted to look at this coin, NMT. I know it's had quite the run. Let's see. I believe this big capitulation was like some FUD that they had, or they got hacked or something. So I've been hearing about it since before that, and then that happened, and I had no money on BNB, so missed out on it. But it's always good to buy hacks and FUD and stuff on chain because you get the mean reversion, right? And realistically, you got the mean reversion within the day or two. If you caught it right there, and if you de-risked it, like, you didn't even have to catch the entire move. If you caught the meat of it, you caught basically 100% gain. I don't know anything about it other than I just hear a lot of people like it. Someone was trying to say that like GCR was buying it on chain, but I think people are just like making a lure of it, tweet it out of retirement. I don't think the wicks are safe, and I think buying the revisit of them is a good move, because it's the same thing that I've been saying for a lot of this stuff. If it can't survive that, then NMT is over, right? So it's just a really good risk to your reward to watch out for these wicks, start slowly buying into it, because if you're wrong, okay, it just goes to zero. But if you're right, you have really good risk to your reward. So it's really all I'd be paying attention to on this one right now is these daily wicks, slowly scale into it. It's hard to play with like technical setups on chain because it's just harder. People can come in and ape 100K and move it 20% out of nowhere. So just slowly buying in. I don't know if there's like a limit feature on PancakeSwap. I haven't used it since BSC season. If there is though, this would be one of the few that I actually do limit order just and leave it in there with the thought of being okay of it going to zero. Other than that, it looks fine though still. So it's still bullish. It's still bullish market structure. It might not even come down here, but that's where I'd buy if it did, because it's the extreme. Otherwise, I don't think like looking for the bullish flips is really smart right now. But if you had to, then it would probably be right here would be your safest spot. You could maybe get away from here actually too, but really that's my level. And it doesn't make sense because you're like buying into resistance. So I don't even like this idea. Just buy the range low, take profit at the range high instead, leave a moon bag for a runner. That's the plan with this one.
You want to look at factory real quick? I'm scared. That shit is just keeps going up. It's like the inverse market.
Main factory?
That's the one. That's the one we do at the AMA with those guys. We actually just put it on YouTube.
Let's look at it.
It pumped so hard after the AMA.
It did. If you don't catch it live, miss out on generational wealth.
I bought this at 125K market cap.
Yeah, it pumped really hard. I don't know if there was like a catalyst or like some news that they announced. It's obviously going to cool off though. I don't even need to pull up the RSI to tell you that this is probably a triple drive bearish divergence. So it's going to come down, I'd imagine. If it wasn't a like low cap, and if this was like Sol, for example, and it was trading like this, I would just leave bids in this area. But it's the same idea with someone can just nuke their entire port and just slice right through it. So it's tough. If you're not already in, and maybe you could just bid with 10 to 20% of what you're willing to play into this coin in this zone and see if it holds the bull market on it. If not, I'd more so see if I can get a dip into this inefficient price action. So that'd be really where that would be like where I want it the most. But if you're really bullish on it and you're feeling FOMO, like just buy like 10 to 20% of your allocation in this zone in case it holds, and then the rest of it throughout this zone. Same idea, you could just throw a fib in, and you want to try to get, this is a weird fib, I haven't set the settings on it. Same idea though, you want to get below the 50% of the zone, ideally, if you can. So I think that's what I would do. 10, 15% max in here, maybe like another 10 here, another 10, and then just like most of it down here if you can. So other than that, it looks good. This also lines up with the SR level, right? So no FOMO here. I'm just gonna throw the RSI up anyway. I don't know if it'll even show on a coin like this. Yeah, dude, bearish is gonna come down. You'll get to buy most likely here at this 40 cent level. I don't even know if I'd buy this zone anymore now that I look at that too, to be honest. Maybe, I don't know. I'd prefer, same idea, like I would prefer to like not knife catch the shallow dip and instead knife catch the big dip. And if it puts in more bullish PA, just buy the top, honestly. Or probably the first plan I said was the best, to be honest. A little bit here, a little bit at the bottom part of it, a little bit at the top of this, and then just get heavier down here until you're fully satisfied with the position. Looks good though. They're doing something right.
Yeah, they're a solid team. Good guys. If you haven't seen the AMA, highly recommend it. It's only about 25 minutes, so you can bear it. 2x it. Some good information on what their products are and services. And they have people utilizing their products and services, which is pretty cool. But yeah, overall, I'm pretty bearish too. Imagine we just range from 15K Bitcoin to 70 Bitcoin for 10 years. RIP. Thanks, Eddie. Now we will go over to legacy markets with GeForce.
Okay, thanks, Pepe. Appreciate it. I'm going to go over legacy markets, S&P 500, Dow Jones, NASDAQ, also DXY, which is the dollar index, and then go to gold, which is significant these days, believe it or not. And also, I will cover bonds at the very end. But right now, it's tanking the market. And if you've been following me in the TA charts and also Stock Saturdays and also with TA Tuesdays, I'll know double top here, end of March, and then also on April 1st. What confirmed that double top was basically even before this huge downturn right here on March 3rd, because it cleared this midpoint. It hung around 5,200. So when you have psychological levels like that, things hang around. You see how it dropped all the way down to 51.47, then came back up to 5,200 and above, slightly above. This is what I call a head fake. When it gets to that psychological level of 5,200, and also the standard deviation line was at that level. This is the black line right here. So it did a head fake, which it's supposed to do, and then came back down, came back up to it, but didn't quite clear it. It actually got to 50.99. That's the actual close of the day. I go off of opens and closes, basically. Interday is interday. I don't really care for it. So now we've just tanked ever since then. So basically on this point right here, which is it was Friday, it was going down. It closed below that 51.47, and that was basically just buying puts or going short, whatever you want to do on it. And now Monday just tanked. Okay, it's going to go down. So in legacy markets, gaps are always filled. So you look at these purple gaps I have. There's a purple one there, purple one here, and another purple one down here. These gaps were filled in. The only gap that wasn't filled in was this gold triangle, or rectangle, I should say. Okay, that hasn't been filled in yet. And I've always been wondering, since market kept climbing since then, what's it going to take to fill in that gap? Okay, now we know what's going to take to fill in that gap. We got issues with Iran and Israel going at each other. So the top of this gap here is 50.38. Okay, the bottom is 49.83. Now in legacy markets, gaps always get filled in. So now we have a possibility of that gap getting filled in. And that's pretty bearish, getting down to 49.83 for the S&P 500, which it's getting there. It's starting to move its way down. Monday was a huge day. Today it's trying to crawl back a little bit. Another thing that I look at is on Bollinger Bands, when it gets below the 2x band and trading between the 2x band and the 3x band, which is down here. And that's a 2x standard deviation away, 3x standard deviation away. That midpoint is what I look at. We traded that midpoint. That midpoint was basically 50.69. Today's high is 50.69. So it hit that midpoint, and I'm looking to see if it's going to move above it or close below it. So that's my landmark right there, that 50.69. And like I said, it hit that today. So we're going to see. We're below the 5,100 level, and this golden gap is pretty outstanding. So I think it will, like all legacy markets do, will fill in that gap. Moving to the Dow Jones 30, this is also a same type of chart. We'll get there, and it's looking as ugly as the S&P 500. NASDAQ, it's a mess. The chart's a mess. I don't really understand the chart. It's really not getting anywhere, showing any indication. We had a major high point right here back on March 21st, and then it did a double top, but it's really not a double top. So you could have two tops and three tops, but the key is that you have lower highs. So this was a high back here on March 21st, and then you have a lower high here on April 4th. And then this one, even it's still lower, it closed lower. So basically things are going down. And you look at this point, you have a low here, and now we have a lower low. So it's not looking good on NASDAQ either. Moving over to the dollar index, and the dollar index is just popping. It's going up significantly, as we can tell with crypto going down, dollar index goes up, inverse correlation. So basically right here, it hit the standard deviation line, and it hit it back here as well and popped up. So we have basically 3 higher lows, okay, right here. Now we have 2 higher highs, and now we have a climbing third high. It's just climbing up. So this is going to get higher. It's just going to go not like gold parabolic, but it's getting higher because of all the war and rumors of wars and everything that's going on in the Middle East. Anyway, the last one we're going to cover is the 10-year bond, the yield on the 10-year bond. So the yields are just going nuts as well. All the auctions keep pushing the bond yields higher, the bond interest rates higher. And you can see today we're way above 4.5%, which was this big candle here. Then we pulled back a little. Now we're above 4.6 at 4.66%. So I've always talked about bonds, especially 30-year bond has a 30-year cycle. And since we were at 0 several years ago, it's only going to go up. It might fluctuate, this daily chart fluctuates, but the general trend on all bonds is going up. The general trend on all inflation is going up as well. Sorry guys, I'm a bear. I've been a bear for the last few weeks. Things are just moving up. You can see that it keeps moving above the 2x band and trading between the 2x band and the 3x band on that. All right, that's all I have. A little long, but hopefully everybody got some good information.
Yes, we did. Thanks, Eddie. Thanks, John. And that is it for this week. Thanks for tuning in. For the guys that were in the server for the live stream, remember that our trading algos are in beta testing on Astrobit, and that you can request charts in TA Tuesday live in the server every single week. You can also use our affiliate link for Blowfin to get cash back at the end of the campaign. Proof of reserves are on Nansen, so you can verify your funds or SAFU. The end, friends.
Join us next week in Discord for TA Tuesday at DeFi-Logic.com.